Wild ride this morning through the crude oil session open. Want to talk about it, let you know how I acted upon it, and kind of walk you through my thought process that led me into partaking in this move. And truthfully, as quick as I entered, before I even had a chance to pull my stop from my entry and place my targets and whatever, the move happened so quick, so efficient. I just exited out, took my profit, not looking back at it for sure. I have a mid-morning tea time today, go out and play golf, so I didn't even have intentions really of trading. I was just having some breakfast, sitting at my desk, observing the market, whether the market produced something or not. Again, had no real intentions of even placing a trade, but the market just tumbled, right? So let's look at the price action here on the bottom screen here. So you can see we come in, we make a low, we reject off that low, kind of holding this area here. But if you notice, we take a really strong pullback, and I have it drawn out up on the top chart. All right, you can see we pull back, and we pull back into the VWAPs. We pull back into this emphasized level here. And these two little candles really were the inkling to say, hey, there's a good chance that we could perhaps push the low here. Now, I was only targeting 75.50 because there was resting liquidity there at the time when this all transpired. It happened so fast, I didn't even have a chance to record it. That's how quickly it all happened, right? I'm entering, I'm getting ready to try to set my stop and set some profit taking, and all of a sudden, boom, I'm like, this huge move transpires, and I'm like, oh, you know what? It's the day before Labor Day weekend. I'm going out to play golf. I don't feel like managing this thing. And that was my intent of not even trading, because I didn't want to get stuck managing a position. And had I gotten one, I wasn't looking to hold it long anyway. And this thing just dumped. So without a stop being placed, without a target being placed, I just exited out, captured a good amount of profit here, pushing through this prior low. And I mean, this thing just continued to tumble and tumble and tumble and tumble into liquidity. And I was just concerned we may get some pushback. And truthfully, when the market graces you with an unexpected move like this, you just take it, right? You're never going to get the absolute top of a move or the absolute bottom of a move. Maybe you'll get lucky once or twice in your career, but chasing the day, trying to exit at the daily high if you're long, or exit at the daily low if you're short, truthfully is fairly silly. If you have a plan that you have a reason to enter the market based on evidence the market's provided, and that evidence comes from your analysis and your interpretation and your expectations, if you have those components, then and only then are you going to partake in the market. The evidence was provided, again, on these two little candles here, as we broke this beautiful pullback, right? I mean, this pullback's from 7:30 to 9 o'clock, so this pulled back for 90 minutes. We held the VWAPs, we held this higher time frame level, higher time frame biases to the downside. You can see here we're off of yesterday's highs. This is the 4-hour chart. You can see here we've made lower highs, we've made lower lows. We're through the overnight low here. Yesterday's little pivot there, right? That would have taken us to 75.30. But really all I was looking to do was get from this little spot here into 75.50 and be done. But it happened so quick and so efficient. I mean, we wish every trade worked like that, but more often than not, it doesn't. That's okay. But when they do bless you with a substantial gain in a very short period of time, you gracefully accept it. Because at the end of the day, the traders that lose, they're greedy, right? And they're forcing trades. So they're either over trading or they're not managing their trades well. And both of those come from a motive of greed. If you do this job well, you don't need to take a lot of trades, right? Like some of my best performing clients are super, super picky, right? They will only take very certain trades under very certain criteria. And those are the traders that have this very smooth, P&L curve, right? Yes, they take losses, they're calculated into it, but their P&L curve is very smooth, where some traders get that greed kicks in, and then their P&L is very jagged. It's up, it's down, it's up, it's down, it's up, down, down, down. And that becomes an emotional roller coaster, which is less than desirable. And I say less than desirable because, listen, you want to have peace in what you're doing. I, at this point in my career, continue to strive to trade less. And that's my goal, right? Like, my goal is to trade less. As my account size has grown, my position sizing has grown. So it's not so necessary to take so many trades to make a substantial amount of money. And my goal, truthfully, is just always aim to trade left. Be an observer of the market. And this is what I advocate for everybody. Come into the market on a daily basis. Be an observer of the market. When you feel like all the boxes have been checked for your trade plan, for your risk management, for your approach to the market, then and only then do you put risk on. And when you put that risk on, you put a definitive stop where your analysis proves it to be wrong, right? Like had I had a chance to put a stop, I would have hovered my stop probably right above this little candle here, right? So these two candles were really the reason that I wanted to get short. Probably just hover my stop kind of right here. It was probably a 2-to-1 risk reward. And some people go, oh, that's not big enough. If you're trading less and you're trading very calculated and you are utilizing evidence provided by the market through in-depth order flow, you understand the intention of what the market participants are showing you, it becomes a little more clear, and I believe wholeheartedly puts the odds in your favor. Now, most people are not at the point where they're looking at institutional order flow. It takes years to get there. So while I'm not taking these, I'm not looking for these bigger moves anymore, it's because I'm taking more calculated moves with more size. Now, the plan that I provide for my clients is very simple. If you do A, B, C, X, Y, Z, right? If you just run down the checklist and then you take that checklist, that same approach, and apply it to any of the markets that we trade or you desire to trade, and you just do it over and over and over and over again, only taking trades based on a checklist that you have made your own, a risk management approach that you have made your own, and replicating that over and over and over again. Net, right? There's going to be a good bunch of wins, a good bunch of losses. The losses should be smaller than the wins, and net profitability should be found. And that is not over a period of 2 or 3 trades, right? Maybe you look at a test sample of 20 or 30 trades. That's why I always tell people, while you're figuring out your trade plan, while you're hammering in your risk management, when you're dialing in what is going to work for you or potentially not work for you, you do that in a paper or simulated style account, right? You just do it over and over and over again. I tell traders all the time, if this is something you genuinely want to do for the balance of your life, which it is something you can do for the balance of your life, as long as you have, a functioning ability to make these decisions, which are, you're utilizing and risking live money, you can simplistically create a plan that's not overcomplicated, that can be done over and over and over again. Now, I often lead to that into saying you have to do it emotionless. And I realize that emotion comes into trading because it is your own money that you're risking. However, you cannot be thrown off kilter when the market decides not to give you what you want, even though you did your job to the best of your ability. This is where a lot of people get frustrated. What most people do is they jump from one strategy to the next, and then they're blending strategies and creating their own concoction in their mind and going, I don't know why I can't find consistency. And the reason you can't find consistency is because you're not being consistent. You have to do it the same thing over and over and over and over again. I've created that plan for you, right? Because most of you don't have it, and that's okay. I didn't have it. I had to figure it out. So as I went down this path of building my own trading consistency, I studied what had worked for others through prior periods of time. I then said, how can I take that and implement it into a simplistic manner that I could take a high school educated person, no fancy degrees needed, and say, listen, if you just replicate this over and over and over and over again, you're going to take losses, and you will have to decide how much you're willing to risk per trade, because I can't make financial decisions for you, right? And then you're going to have to decide how you're going to take profits. Now, I advocate a process that I call pay myself, protect myself. What does that mean? It means as the market goes in my favor, there's no reason not to take some profit, right? Add a part of your position. I know other people sit there and tell you, well, if the market's going in your favor, add to the position. That can work. I think that's a little more advanced until you have hammered out exactly what it is you are going to be doing in your own trading. So for me, I've always looked at it from the perspective that if I did my job to the best of my ability, if I followed my trade plan, I followed my checklist, and the market graced me with the opportunity to take some profit, I'm going to take some profit. Maybe not all of it, right? But I'm going to take a little piece, and if the market continues towards the next level I've identified, or the prior price action I've identified, or liquidity I have identified, I'm going to then take more profit, right? So pay myself, protect myself. I do the same thing in position trading, meaning things I plan to hold for a long period of time. Swing trading, things that I'm holding for several days or maybe even several weeks. I've ran model portfolios for several different companies. Same thing. Pay yourself, protect yourself. This way, even if the trade doesn't give you everything you expected you were going to get from it, you at least put some money in the bank, right? And those small wins should offset your small losses. In the bigger picture, the big wins are what's going to create that net profitability. Because that's all it is, guys. It's a business of understanding probabilities. There's a probability that the trade's going to work in certain instances and not in others. Now, how deep you want to go in the rabbit hole of reading the tape, which is the time in the sales, understanding delta volume profile, understanding traditional volume profile, reading institutional order flow, footprint charts, things of that nature, going into cumulative delta and things those are all get very complex, right? I'm not saying that eventually down your career path it wouldn't be a good idea to look at those things. But after you've created net profitability, after you have a strong trade plan, because the trade plan I provide for you guys is so easy that you don't have to think too hard about it. It's just a simple checklist of this is what we look for, and it puts the odds of the market continuing in that direction. I call it what it is, right? Inertia. Inertia means moving energy. That energy is going to continue to move in a direction until that energy runs out. In the market, it's aggressive buyers or sellers are going to continue to move the market in their respective directions until they run out of steam, right? And that does happen. Crude oil can continue selling off all day today. It may not. I don't know. Like I said, I'm leaving the office. I have a mid-morning tea time, and I'm off for the weekend. I'm taking some time off. I'm going to spend some time with some family. We're going to do a little bit of motorcycle adventuring. We're going to play a couple rounds of golf. We're going to do some barbecuing. We're going to catch up with some friends we haven't seen in a while. Because at the end of the day, why do we become traders, right? So that we are unchained from the traditional ways that, money is earned. Yes, it requires a skill set. Yes, it requires our time and money and effort and energy. But we can create our own schedules. We can decide whether we're going to spend more time or less time. Right? We can decide if we're going to, take days off. Right? Now, again, this morning I was just having breakfast here at my desk, being a spectator of the market, just sitting back watching, and I saw an opportunity. I took advantage of it. Had I not seen an opportunity, I would not have taken advantage of it. Because simply, there's no reason to force a trade. If it doesn't come together today, there's tomorrow. If it doesn't come together tomorrow, there's the next day. So I know I'm a little lengthy in this video, longer than most of the ones that I do recaps on, simply because so many people, their greed is driving them, right? FOMO is driving them. Oh, the market made a huge move. Now what? Right? Now what? I missed it. Now what? Well, until the market gives you a reason or provides you some evidence to believe it's going to continue in a direction or another, there's really nothing to do. Right? While I was eating my breakfast, there was nothing to do. I was just a spectator. I watched price action here pull back into a higher time frame level, right? That you can see price has been dancing around essentially throughout the overnight. Notice both of my VWAPs were here. My higher time frame bias was telling me that we should push to the downside. Looking off to the side here on my 4-hour chart, you can see the daily volume profiles here as well, and you can see where projected support has, could potentially be. You can see we've tested this lower trend line, and we seem to be getting a little pushback from it. So in one screen, I have basically everything I need to see, right? And I have it segregated because I don't want to clutter a chart. Now, for my clients, I provide what I call the reference screen. The reference screen is going to give you the setup, 2 time frame momentum, the VWAPs, the moving averages, the volume, everything you need to check the list. Check the boxes on the list. And then I advocate that they trade on a naked chart. What's a naked chart? Something that is just minimalistic stuff on it so that you can see price with great clarity, right? This is minimal. I have all my levels up top here. Like I mark them off every night before the next session. I mark off my levels that I have interests in seeing how price may react around it. Okay, I run my 2 VWAPs on this chart. I run my higher time frame momentum on this chart, and then I look at my 240 chart here as well. I have been studying the 4-hour chart since inception of my trading career, this chart, this time frame has been invaluable to me. Being able to give me kind of a bigger picture idea of what's going on. You can see here we had a huge price surge, we fell back. Another huge price surge, we've fallen back. We even had a huge price surge to the bottom, we reversed. So it gives me a kind of macro direction of what the market's doing. On my chart down below, I have several different volume indicators applied here. So this is where I'm very focused on my volume. I have cumulative delta on top. I have my volume profile off to the side. I have traditional volume on top. I have advanced volume with the settings that I like below, and then the delta volume below that as well. On the screen next to it, I run my footprint chart. Okay, my footprint chart consists of all of the components that I've customized it to give me the data that I'm looking for to make those decisions. And then when I place my trade on another screen, right, I am placing my trade on a completely naked chart. There's nothing on it because I have all the reference that I need. I have liquidity, I have my VWAPs, my levels, I have my 240, I have my 5-minute chart here with all the volume I need to look at. I have all the balance of the advanced order flow on a second screen. And then when I place my trade, there is nothing on that chart except the candles. That's it, right? So I need to put together the thought process. I need to then go to the footprint chart and find the evidence that confirms the thesis that has come together based on the analysis and interpretation. And then I can execute a trade. Right? That's how I do it. Now, that has all been simplified for you and provided for you so that you can do it with a great amount of ease. I provide you with the levels. I provide you with access to the liquidity. Provide you with access to the analyzed charts. So all you have to do is pull up a chart of minimalistic things added to it to trade on. You see my reference screen, and then you see your chart, and you keep it nice and easy. Now, the reference screen includes the content of crude oil, gold, the NASDAQ, and the S&P. Right? Why? Because those are the 4 markets we look at. I believe that you have an edge trading the NASDAQ and the S&P if there's congruency between the two of them. We've always looked at gold. Sometimes it is coupled with the indices, sometimes it's decoupled. But gold produces a fair amount of good opportunity for us. Crude oil has been the market I've traded since I began trading and will likely end my career trading because it's the only market that I personally trade. Right? It's okay, but I provide the same content, the same analysis, interpretation, and expectations for all 4 markets because some days crude doesn't give us a good setup. Some days gold doesn't give us a good setup. Some days none of the markets give us a good setup. But more often than not, within our live session from 8 a.m. to 11 a.m., and even beyond that, because that room is made available to you from roughly 7 a.m. when I turn on the computer till well after the closing bell. You have access to all the content so that you can see clean and clear when the trade plan that I have set forth comes together so you can decide if you are ready, if it aligns with what you believe works for you. If you're ready to take a trade, you take the trade. If you're not, you don't. Nobody's here to force your hand into doing anything. Nobody's here telling you what to do, simply providing you with what you need based on experience, right, of what works for intraday futures trading. Now, outside of that, I provide a variety of other services. All of them you can see on the website. Some of them align with the live intraday trading. Some of them are specifically designed for equities. Some of them are specifically designed for swing trading, position trading. They're ultimately depending on the type of trader you are. So I've broken down the program into components because I realize not everybody needs everything. Right? Like that. I take everyone's feedback and go, like this little piece I don't use. So I feel like I'm paying for something I don't use. Okay, great. We just kind of separate them out. Now, if you're trading the S&P 500, whether it is intraday, swing trading, or position trading, the analysis that I provide for that market, I don't know how somebody would trade without it, right? Because it's the same analysis I provide for crude oil, right? How would I trade without it? I need access to that information and that data that I provide, right, for myself, so I provide it to you. Most new futures traders start off with the S&P 500, okay? And some traders who have been doing it for forever and a day, also S&P 500. So all of those different components are available to you should you decide to act upon any of them. But what I would encourage you to do is send me an email. Let's have a conversation. Jump on the phone for 10 or 15 minutes. Let's get a little bit of background. Where are you in your trading? Do you have a trade plan? Are you looking to intraday trade? Are you looking to swing trade? Let's talk about what your objectives are. Because if you tell me you work a 9-to-5 job, intraday trading probably isn't going to work for you because you're never going to get enough screen time. But swing trading may be suitable for you, whether that be in the futures market or the equities market. We can decide. So I find that my clients that get the most out of what I provide for them, it's because we have a conversation, right? No charge, free, no obligation consultation. Pick up the phone, we talk, tell me about yourself, tell you a little bit about myself, my history, and perhaps there's not something I have that works or aligns for you, and that's okay, right? But if there's something you're looking for to try and advance your trading career, is a 10-minute phone call worth it? I think so, right? Even if we just end up having a conversation and saying, listen, this doesn't align, maybe I can make a recommendation to push you towards, somebody that it might align with, or a program that may align better with you. But you don't know until you have the conversation. So I always leave that door open, right? I take phone calls in the afternoon, in the evening, even on the weekends. Just have a chat, get to know each other a little bit. I like my clients to get to know me because if I'm going to be working directly with you, it's fairly relevant that we have an understanding of who each other is so that we know that we are compatible. There's a lot of people out there that are just, you're never going to see them, you're never going to talk to them, you're never going to know who they are. You're just going to buy a program, right, for a couple $1,000 and hope it works, and when it doesn't work, you're going to be frustrated because you have no way to get in direct contact with this person to, get your questions answered. Because more often than not, when something's not working, there's just a simple misunderstanding. And that misunderstanding can be rectified relatively quickly, relatively easy. So I did this video just to kind of show you how the market played out today, where I entered, why I entered. But I also kind of wanted to circle the wagons, spend a little time speaking to the traders that are trying to get to the next level in their career. And there's no harm in simply having a conversation, seeing if there's something that we can do together that works to help you grow, right? I've taken traders who have fumbled around for many, many years and got them on the right path. I've taken folks, because they weren't traders, that had never seen a futures market chart before in their life, and turned them profitable, wildly profitable. 200% return on their account inside of a year. So it's not that it can't be done. It just takes time, effort, discipline, and commitment. So I'll leave you guys with that. Again, I know this was kind of a long-winded video as we head into the holiday weekend. I hope you have a phenomenal, holiday. Spend some time with your family. Hope you get to do something you enjoy. But if you want to chat trading, always feel free. Shoot me an email. Set up a phone conversation. We'll talk about it. See if I can help you. And if I can, great. If I can't, maybe I can just make some simple suggestions that could take you down a path that you're trying to head towards, that maybe you just haven't failed enough to kind of know where you're headed, how to get to where you're trying to head to. And I say that because after 13 years, I can tell you I have failed so hard, so many times, that the value that just comes from understanding those mistakes so that I can help somebody either not make them or not continually repeat them, I believe is really proven to be valuable to hundreds, at this point thousands of people. So I'll see you in the next video, but I wanted to kind of share this message today as I conclude my trading week and go to step out of the office. So God bless, guys. Hope you have a phenomenal weekend, and I look forward to speaking with you soon.